Good evening, traders, and welcome to today's daily update. My name's Nishal Patel, and I'm going to be giving you a synopsis of pretty much what's happened over the course of today. Now, we've had our daily update right after a host of announcements today, and we can see the data that's come out over the course of today. First thing this morning, we had the trade balance figures out on the Australian dollar, which underpins the weakness that they've obviously had in their economy. For those who don't know what the trade balance is effectively the net value between imports and exports, and we've got 0.46 billion with a projected total of, or an estimated total that we're looking at of 0.93 billion. So we've obviously had a huge difference there from what is exported to what is imported, which has left them with a slight deficit. Their retail sales also were left very static with an estimated 0.2% increase. So not too favourable in terms of the data coming out from Australia early hours of this morning. That was followed by the key data from the euro, and all eyes are being glued to today, particularly in Frankfurt and the HQ of the ECB, with the minimum bid rate being unchanged, and most certainly that was pretty much expected, and for most of us we were expecting no change to be made on the bid rate, but it was the ECB press conference that really caused the ripples. Now, Mario Draghi was, as usual, fairly dovish, but he did give a fair amount away. Growth projections, they've increased their growth projections, and as expected, they've also said inflation may be coming down somewhat, with the obvious spike and strength in the euro. So obviously, with the strength of the euro over the course of much of this year and bullish momentum it's gained, it's obviously making imports very attractive and cheap. So it's obviously affecting the prices. So inflation's riding lower in the medium term for them. But the big announcement was of the asset buying program. Now we know it's in the billions per month, close to 60 billion per month, and Draghi gave a key few sentences letting us know that if nothing changes right now in the global economy, they're on track to reduce their bond buying program effectively, and they'll have more details of that in the October meet, so we should potentially have some details there. But that has obviously led to a spike in the euro today, and because investors and us traders alike have realized that there's going to be no change right now for the immediate future, so the rally can continue. That was followed by unemployment claims in the US at 1:30 as well, and again, as you can see on the screen, 298k to the 245 expected. Now, again, jobs numbers don't look good coming out from the US, and the US really has taken a huge knock, and that really is the state of play across the charts that we've seen across the board today. Biggest news being the bruised state of the US dollar. It has taken a firm battering today, and we're going to have a quick look at that in a moment when we turn to our charts. On other news, we haven't had any updates on any advancements or any escalation of tension out in Korea, which obviously is a very good thing. But the Category 5 Hurricane Irma is plotted. It's a clean path by the looks of it, straight into US mainland and hovering straight through the Florida Keys and into Florida, Maine. So that will obviously cause some problems there. So let's go on to our charts and let's see what we saw over the course of today. Okay, guys. So first, starting off on the price of gold. So we're having a look at the gold spot price. We can see today came up and hit a price of 1349.03. So just under 1350 dollars per troy ounce on gold on this particular account. Obviously coming up and creating a high for this week after we saw a gap earlier on this week. That has primarily been caused by the state of that bruised dollar, or the dollar. It's obviously hurting to a major extent. We did see an uptake of the USD late yesterday evening, and the buying of the USD, and that was when Congress actually sanctioned for the movement of the deadline of their debt ceiling, which was scheduled for September, the end of September, and it now has been pushed back to December. So obviously we saw an increase in the value of the yield, and thus the US dollar, but that's obviously short-lived, and especially with the data coming out with the jobs numbers not looking too favorable, have hurt the US dollar directly, and we've seen a spike in gold today. And the euro alongside that, we've seen a lot of the momentum being waned off throughout the course of this afternoon. An initial spike well above 1.2, as we can see on this chart, and then right now it's just sitting just below that right now at 1.1996, so just below 1.2 right now. Obviously looking to see if it's going to be closing above that level, and I think that's what most traders are going to be looking for. Alternatively, potentially coming back to that 382.5 that we've got highlighted on the screen. Moving on forward, having a look, this is a weekly time frame on the Japanese yen, which is quite interesting because we've come back and we've tested that key 108.25 to 108.30 level, and again, many traders are going to be looking for a break of this area before we potentially do see the Japanese yen spike below. But we've obviously seen a resilience off this, despite the fact we have seen a push to the safe havens. We haven't seen that come off right now, and that's on the weekly time frame. If I flick it over to a daily time frame there, it gives us a clearer picture of how it's come through that level, down to that 25 area. I've got this level highlighted at 108.28 on this particular account, but right now floating at 108.52, so just above that 108.50 key area again. Again, still stuck within the bottom of its range, which it has been in, as we can see, or that was highlighted on this weekly time frame, and we can see it's still glued to the bottom of that range, and it has been for some time. Moving on to the Australian dollar. Now, with the Australian dollar, the data coming out in the Australian dollar wasn't too favorable in the early hours this morning. Did cause it to ripple down, come close to that 618 fib that we've got highlighted on the screen, but has stayed above, with the weakness in the US dollar and the Australian dollar obviously capitalizing on the momentum that right now floating at 0.8029 right now, and then moving on to cable again, breaking up to that 78% retracement on the screen right now on this daily time frame, right now floating just above 1.3, so 1.307, circa, doing well to stay above that 1.3 mark. Now moving on to the Canadian dollar, obviously we saw a 25 base point hike on the Canadian dollar, taking it to the 1% mark. After we saw the momentum or the uptake of the US dollar early yesterday evening, we saw the continued push on the short side, so still looking fairly bearish. I was initially looking and hoping that we may get some kind of correction at some point, and I'm still hoping that we may do. some point next week back up to this 1.2366 level. It works out to be quite well off the weekly time frame on a as a fib, as a 618 fib level, and then moving on finally and evaluating how WTI is doing, obviously with Hurricane Irma charting its path clearly into the States by this weekend, so we've got a day or two before it hits. It's an immensely powerful storm, and by the sounds of it, there is another storm in the horizon just coming across the Atlantic right now. And I call it a storm, but it's a very strong hurricane indeed. It has unfortunately killed some people as it's made its as it's carved its way through the Caribbean. But we've had we've got a build up of this doji bar building into an inside bar, so you're seeing a certain amount of indecision on the marketplace. We are seeing and hearing that certain refineries in Houston and on the side of the Gulf of Mexico are going back into full operation practice at some point today and potentially into tomorrow. But with this new hurricane coming into Florida, and then uncertainty of how it's going to pan out. Will it go into the Gulf of Mexico and once again hit those key areas where the refineries are based? Will be a talking point in the early Monday, Tuesday, most certainly. So could potentially see a spike in the price of crude Brent or WTI, whichever one you're trading, early parts of next week, so stay glued to it. All right guys, so we are going to have a morning update tomorrow. Stay tuned. We'll give you our helpful hints of what we're looking to potentially trade in the early hours. Until tomorrow, happy trading guys. Bye bye.